Hello and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to another session of Economy This Week, wherein we take up important economy related articles which have appeared in different newspapers such as Mint, Business Standard, Business Line, etc., and analyze these particular articles. In this session, I'll be taking up these six very important economy related articles, and the time period from which I've taken the articles is from 17th to 23rd July 2025. Before I start the discussion, certain very important announcements. First one, a lot of you keep on asking me for the PPT as well as the notes associated with the articles that I'm discussing. All you need to do is join my Telegram channel, and the displayed QR code is of my Telegram channel. Join the channel. Once the session is over, the PPT as well as the handout covering the notes of the articles that I'm discussing will be uploaded in my Telegram channel. Second, I know for a fact that a lot of you are preparing for the civil services 2026 and 2027. If you want to ace the examination in the first attempt itself, you need proper guidance in terms of covering the complete static portion, the coverage of the current affairs. You need to appear for multiple test series for both prelims as well as a mains, and you need a good material for revision purposes as well. All of this is available when you enroll into our courses. Use the code IAS English and you will get an extension of up to 12 months free of cost. Those who are interested, do check out the details by clicking on the link provided in the description below. Let me start with the first very important article. This article has appeared in Indian Express. It talks about RBI's Financial Inclusion Index. What is the idea of a Financial Inclusion Index? And before that, what is financial inclusion? Financial inclusion basically means you're providing the financial services. You're providing the financial services to the people who require it in a cost effective manner at their doorstep. This is the definition, the simplest one to define the financial inclusion. Let me give you one example. The government of India implemented Pradhan Mantri Jan Dhan Yojana, PMJDY. This is a prime example of government of India implementing a policy to promote financial inclusion. You want to open a Pradhan Mantri Jan Dhan Yojana account? All you require is Aadhaar number. You do not require introduction's signature. You do not require multiple documentation. You do not require to maintain the minimum balance in the bank account. So this is a prime example. In addition to this, you can even quote the Prime Minister's Jeevan Jyoti Bima Yojana, the Prime Minister's Suraksha Bima Yojana, Atal Pension Yojana, or even for that matter, RBI's banking correspondent, the small finance banks, etc. All these are the reforms to promote financial inclusion. But how do we understand what is the rate at which financial inclusion is happening in India? What is the pace at which financial inclusion is taking place? For that particular purpose, Reserve Bank of India back in the year 2021 introduced a new type of an index, and that index is referred to as Financial Inclusion Index, or in short, FI index. Now, this FI index, like I said, for the first time was introduced back in 2021. What does RBI do? RBI annually basically measures India's performance, that is, throughout India, how we have performed under three very important indicators. And these three important indicators are access, usage, as well as quality. And mind you, these indicators are further subdivided. There are sub indicators as well. Put together, totally more than 90 sub indicators are there. And these sub indicators basically focus on the supply side in financial inclusion as well as the demand side. For example, how many ATMs have been opened, how many banking branches have been opened, etc. These focus on the supply side. And from the consumer side, that is the demand side, how much, right? Let's say the accounts have been opened, how much digital literacy is there, etc. That focuses on the demand side in the banking sector. So this is an index, and this is being published annually by Reserve Bank of India by considering these three parameters. Another very important factual information that you need to make a note of is one, this financial inclusion index does not have a base year. Please remember this. This does not have a base year, meaning what? You take indices such as, let's say, the CPI, or for that matter, you take the index such as WPI, Wholesale Price Index, Consumer Price Index. Generally, you will be able to measure and publish these based on the concept of a base year. There is a reference time period against which we are comparing. In the context of the financial inclusion index, please remember there is no base year. Essentially, what RBI does is it will give weightage to all the three indicators. For example, access has been given the weightage of 35%, usage has been given the weightage of 45%, and the quality has been given the weightage of remaining 20%. And what has been the performance of the parameters under all these particular indicators is measured, and finally the data is published by Reserve Bank of India. According to the latest data which has been published, please have a look at the factual information now. Last year, that is March 2024, the performance as per the number was 64.2. And as per March 2025, the latest data, the indicator or the index has registered a number of 67. But what is the meaning of these numbers? The numbers are allocated between 0 to 100. 0 to 100, these are the two extremes. If you are given a score of 0, then it simply means there is no financial inclusion, there is a complete financial exclusion. And as nearer and nearer you go to 100, you are moving towards financial inclusion. And if you hit the number of 100, it essentially means there is a complete financial inclusion. Now, these are certain very important points in the context of the Financial Inclusion Index, the data for which has been published by Reserve Bank of India very, very recently. Now, based on this, I've given an MCQ. Let's solve it. Consider the following statements regarding Financial Inclusion Index. It has indicators only from the demand side. Does it have indicators only from the demand side? No, it has indicators from both supply as well as demand side. The index has a base year of 2011 and 12. The index does not have any kind of base year. For CPI, there is a base year. For WPI, there is a base year. For GDP growth rate calculation, there is a base year. For index of industrial production, there is a base year. For FI index, there is absolutely no base year. Third one, the score of 0 means complete financial inclusion. In fact, it will be exactly opposite. The score of 0 means complete financial exclusion. All the three statements are incorrect. The right option for this question will be option D. None of the statements. Let me go forward to the next article. Sebi Cautions investors against dabba trading practice. What is this idea for dabba trading, which is gaining a lot of traction in recent times? In fact, Sebi has given this particular caution for a very simple reason. In one of the newspapers, one of the company took out an advertisement promoting dabba trading. Now, what is this idea for dabba trading? Let me explain. Imagine you want to trade in the stock market. Let's say you have a lot of money, you want to trade in the stock market. In the stock market, or let's say in the futures or options, that is the derivative market. Generally, what happens is there are certain market participants. There are certain participants in the market, or else I've used a technical term here, market infrastructure institutions, MII, market infrastructure institutions. For example, there are stock exchanges. This is one market infrastructure institution. There are clearing corporations. That is also one more type of market infrastructure institutions. Now, if you're wondering, what is the basic idea for MII? These are the critical types of infrastructure which is required for proper functioning of the market. If any of these infrastructure institutions collapse, then there will be a bigger impact on the whole financial market itself. For example, whenever you want to trade, whenever you want to buy or sell the securities in the market, you will have to use a stock exchanges. In addition to this, you will also have to use clearing corporation. They will ensure the securities which are traded or on which we have agreed to buy or sell, the money will be transferred and the securities right in return are right transferred from one account of demat to another account of demat. So there is a necessity of these kind of market infrastructure institutions. Now imagine there is a market where you are conducting the same, that is, you are buying and selling shares, you are buying and selling instruments like this, but there are no market infrastructure institutions. It is essentially taking place outside the purview of all of this. That essentially is the concept of dabba trading. Everybody is okay with this? That is essentially the concept of dabba trading. That is, in this particular market, there is no regulator. Sebi, in fact, says this is illegal. This is dangerous. Don't trade. Don't participate in dabba trading. It is outside the traditional markets which have been set up for trading purposes. That unofficial market outside the traditional market, outside the recognized market, is called as dabba trading. Now, it's not that only SEBI is warning the investors against participating in the dabba trading. Couple of time or some time ago, the NSE, National Stock Exchange, one of the major stock exchanges in India, also warned that investors, many of them are involved in the dabba trading. It asked them to refrain from being involved in the dabba trading. Now, two very important things here. One, why do some of the investors prefer to trade in dabba trading? And second, if you are caught doing that, or if you're doing that, what is the risk associated with that? Let me explain both of the aspects here. The investors, many of them, prefer to participate in dabba trading, especially, let's say, instead of going to the official derivative market, they will prefer to enter into dabba trading for futures and options. Reason being, when you want to participate in the derivative market, there's a concept of margin requirements. Those margin requirements are not present in dabba trading. There is a lot of paperwork involved. This doesn't have paperwork, or if it is there, it is negligible. Many of the investors are barred, are prohibited by the regulator from participating in the market. They will also prefer to enter into dabba trading. So, because of these and many other reasons, many of the investors enter into dabba trading. Now, once you have entered into dabba trading, what will happen? Is there any risk associated with this? Listen to me very carefully now. There is one piece of legislation in India which talks about all of these particular securities. That is Securities Contracts Regulation Act. Please remember the name. Securities, I'm repeating the full form now. Securities Contracts Regulation Act of 1956. Now, if you are found to be involved in the dabba trading and if it is proven, you can be penalized for this. You can even be sent to jail because of this. For example, under SCRA, there is a section 23(1). And if you're violating this particular provision, that is, you're involved in dabba trading, under this particular section, you can be penalized up to 25 CR. Up to 25 CR, you can be penalized. In addition to this, you can also be sent to jail for up to 10 years. For up to 10 years. So you can be imposed with monetary penalties, or you can be sent to jail up to 10 years, or both of them can happen in the context that you're found in dabba trading. So looking at all of these particular issues, SEBI is saying do not involve in dabba trading. And moreover, SEBI is worried that these investors do not understand the risk associated with investment in dabba trading. What is the risk? I said, in case of the normal or the traditional recognized market, there are clearing corporations. There is one issue or one risk associated with investment in the market, which is called as counterparty risk. Please remember, counterparty risk. What do you mean by counterparty risk? What if the other party, which is involved in the trade, what if the other party doesn't agree to complete the trade transaction? What if the other party doesn't agree to complete the transaction? That is, they agree to sell the shares to you, they will default, they will not give the shares. Or else the other party wanted to purchase the shares, entered into contract, but they are not willing to purchase the shares. There is a concept called as a counterparty risk associated in investment in the markets. And that is the precise reason to address the issue of counterparty risk itself. There are clearing corporations, but these are present in recognized markets. For example, NSE. For example, BSE. We have clearing corporations there. But in case of dabba trading, there is absolutely no clearing corporation. It is illegal, it is unrecognized. And as an investor, you will be facing very high amount of counterparty risk. That's the reason SEBI says don't be involved in dabba trading. Now, these are certain important points. Based on this, let's solve an MCQ. Those who want to give it a try, pause the video, solve the MCQ, then you can listen to the solution. Or those who do not want to solve on your own, you want me to solve, continue the video. Question number 2. Consider the following statements regarding dabba trading. It leads to loss of tax revenues for the government. Yes, statement is absolutely correct. Why? These are not taking place in the regulated market. These transactions are taking outside the regulated market, which means government doesn't know how many transactions are happening. Government may not have a record of the transaction. And anybody who is involved in dabba trading, if they make a profit, they will not go to government and simply say, these are my profit, right? And these are the taxes on the profits, you collect it. So obviously, Government of India will be losing lot of tax revenues because of dabba trading. It is declared illegal under Securities Control Regulation Act. Yes, under this, yes, it is declared illegal. It exposes the investors to counterparty risk. I've told you this. There is a very huge counterparty risk if you're involved in dabba trading. All the three statements are correct. Hence, right option for the question will be option C, all the three. Now, let me go forward with the next article. HDFC Bank board clears bonus issue dividend of rupees 5 per share. What is the article all about? What is the concept? Let's try and understand. Now, a company which is a listed company. Listed means what? A company's shares are available on stock market for trading purposes. For retail investors such as you and me, you can see these particular shares of the company listed in the stock market. You can purchase, you can sell. Such companies are called as listed companies. Now, these listed companies will announce dividend. And what is a dividend? When the company earns profits, part of the profit is taken and given to the owners. Part of the profit is taken and given to owners. And who are the owners in case of a listed company? The shareholders are the owners. Now, let's imagine here is a company which is earning profit and they want to improve the confidence. They want to reward the shareholders. One way to do that is giving very high amount of dividend. Another way to do that is simply go for bonus issue of shares. Go for bonus issues of shares. Now, what is this concept of bonus issues of the shares? Let me take one very simple example. Imagine there is a listed company ABC and I'm holding, right, let's say 10 shares of this listed company. Again, I can be holding 100, I can be holding 1000 also, I can be holding even 5 shares also. Do not worry about all of that. In this example, let's say I'm holding 10 shares of this particular listed company. Now, this company, instead of giving very high amount of dividend, they can do that as well. But instead of that, what they can do is part of the profits, they can use it to reward the shareholders by announcing a bonus share. And in this case, let's assume the company says for every 10 shares that you own, I will give you one bonus share. Which means now after the announcement of the bonus issue, instead of owning only 10 shares, in addition to the 10 shares, I will also get one bonus share from the company. The total number of shares that I'll be holding will be 11 shares. Is it guaranteed that always for every 10 shares the company will announce one bonus share? No, it all depends on the company. They can even do 1:1 bonus. That is, for every one share that you have, I will give you one additional bonus share. But very important point to note here is that these shares are given free for the investors. That is, as a shareholder, I do not have to pay money to the company. I will not be paying any amount of money to the company. Company will be giving this particular share free of cost to me. Of course, there is an accounting mechanism within the company itself which will increase the share capital of the company. But as an investor, as a shareholder, I will not be paying any amount for this particular bonus share. As a result of this, what will happen? Let's try and understand that as well. Now, as a result of this, one, the share capital of the company will increase. Second, the total number of shares which are present in the market will also increase. And when the total number of shares does increase, what do you expect for the market price to happen? The market price of the shares will start decreasing. It's very simple logic. The number of shares will increase, market prices will decrease. And when the market prices will decrease because of the bonus issue, the shares will become more accessible. The shares become more accessible for other retail investors. More and more retail investors now will be interested in buying, selling of your company's share. So these are certain very important outcomes of bonus issues of the share. Now, in addition to this, some of you might be thinking, sir, the concept of bonus issue sounds very similar to rights issue. It is very similar to rights issue. My dear, in rights issue also, the shares are issued by the company to the shareholders. But listen to me very carefully. In rights issue, the shareholders will have to pay to get new shares. I hope you understand this. The shareholders, if they want, again, that's the reason it is called as a rights issue. Because under rights issue, to the existing shareholders, I repeat, to the existing shareholders, the first option of buying these new shares is given to existing shareholders. So the existing shareholders, if they want to purchase the new shares, they will have to pay money for it. Whereas in case of bonus issue, the shareholder doesn't pay money. These are issued as a bonus. That is, in addition to the existing shares, this is issued free of cost. Again, I'm repeating, the company will transfer certain reserves. That is the precise reason the capital or the share capital of the company increases. But that is more of an accounting practice for a company. So, is it same as rights issue? No, absolutely no, it is not the same. Now the bank, HDFC Bank, has announced that it will be issuing or it will be going for a bonus issues of share. In addition to this, the bank also has announced an interim dividend. Interim means, right, the dividend which is given in between the year. Generally, the dividends are issued by the company or paid by the company after the financial year is over. Because now, after the financial year gets over, the bank knows how much is their profits, how much is the overall expenditure, etc. So, generally, after the end of the financial year, the banks, or for that matter, companies announce dividends. But now HDFC has announced an interim dividend of 5 rupees per share. So these are the two very important points associated with the article here. Please make a note of it. Based on this, I've given an MCQ. Let's solve the MCQ. Consider the following statements regarding the bonus issues and rights issues. The focus under both are the existing shareholders. Yes, under both of them, the focus is existing shareholders only. But again, when I say only, do not assume that under rights issues, shares will be issued only to the existing shareholder. First, they are issued to the existing shareholder. If the existing shareholder doesn't want to buy them, then they will be issued, right, to the public. Whereas in case of bonus, there is no concept of rejecting. The company will allocate the shares, you will get the additional shares to the existing shares that you're holding. And more importantly, in case of a bonus issue, the ownership, the percentage ownership doesn't change. It shall remain same. it will remain same. Okay, because the same proportion of existing ownership, the same proportion is used to allocate new shares. So the focus under the both of these are existing shareholders. Yes. Under both, the number of shares in the market increase. Yes. Both of the statements are true. Right option for this particular question will be option C, both. Let me go forward. Next important article. Center states near consensus on cess. Certain very important points have been mentioned in the article. Let's go one by one. Point number one, the government of India, when we introduced GST, also introduced the concept of compensation cess. They introduced the concept of compensation cess. That is a GST compensation cess. It's been more than 8 years since the introduction of GST, and since then there has been a concept of a compensation cess. What is this idea? The state governments, when there was a proposal of GST to be introduced, were worried that with introduction of GST they would lose a lot of tax revenues. They were worried because before that the state governments individually could utilize the taxation to adjust the revenues that they want to collect in that particular financial year. But with the introduction of GST, individually the states cannot determine what is the rate of GST applicable. It has to be decided by the constitutional authority, that is the GST Council. States are represented, but a state individually cannot decide. The GST Council has to decide now. So the states are worried that with introduction of GST, my taxation power, indirect taxes, will be taken away. What if I'm not earning sufficient amount of money under GST? In order to pacify, in order to address this particular concern of the state governments, the center has introduced idea of a compensation cess. There was a bill introduced, it became an act, and under the compensation, right, that bill or the act, the government of India offered the compensation to the states for a period of 5 years. The compensation was offered for a period of 5 years. Now 5 years is over. That is June 2022, the 5-year tenure is over. The center is not providing any amount of a compensation to the states, although they are demanding. Center has not accepted the demand. But what is the update here? Update is simple. Despite the 5-year tenure getting over, the center has continued to impose and collect GST compensation cess on some of the products which are falling under the slab of 28%. According to the extension that has been provided, March 2026, mind you, focus on the year 2026 because most of you are going to write exams in 2026, by the way. So automatically this topic becomes very important for you. So March 2026 will be the last day, or let's say end of March will be the last day with implementation of GST compensation cess. So there is a very important task that is being taken up by the center now. The government continued the imposition of GST compensation cess in order to collect the money and use this money for the borrowing that the center did during the period of pandemic. During the period of pandemic, the story is very simple here. The amount of taxes collected by the state governments actually went down. And because the tax collection went down, the government of India had to pay higher compensation to these particular states. And because they had to pay higher compensation, in addition to the cess they collected, they were forced to borrow from the market. Use the borrowing to basically repay, the loans. Use the borrowings to pay compensation to the states. Now, to repay the loans, central government is collecting GST compensation cess. This is point number one. Point number two, what has to be done if there is a surplus compensation collected by the center? This year they are supposed to repay the loan. The center is saying the amount of GST compensation cess that I'll be collecting is greater than the amount I owe in form of repayment. Right? How much is the surplus? How much is the excess? The excess amount of GST compensation they'll be collecting this year is to the tune of 40,000 crore rupees. 40,000 crore rupees, mind you. So now the second issue is, what should we do with the surplus? I've collected the GST compensation, I've repaid the loan, but extra amount of compensation is left. What should we do? As of now, they are considering dividing this equally between the center as well as the states. They want to divide this equally between the center as well as the states. This is point number 2 that is mentioned in the article here. Point number 3, there is one more debate that is happening. Should we rationalize the GST structure by abolishing? Should we rationalize the GST structure by abolishing one of the GST rates? One of the GST rates, let's abolish. What is the rate they are targeting? 12%. They are targeting 12% GST rate or GST slab. They want to abolish this so that the number of slabs under GST will go down. As such, right now, one of the criticisms against the GST is that there are too many slabs. We have 0%, we have 5, we have 12, we have 18, we have 28. These are the most important slabs. We have too many rates of GST as of now. We need to reduce the number of slabs because India is one of the very few countries around the world which has implemented GST but has multiple slabs like this. A lot of the countries who have implemented GST either have 2 slabs or 3 slabs at the most. So one of the criticism is too many slabs. We need to rationalize the structure. We need to reduce the number of slabs. Now government is considering, let's abolish the 12% rate altogether. And with that, we will be bringing most of them under 5% GST rate. The government is in favor of this. Now I know some of you will be thinking this way. Sir, if I'm going to abolish 12% and bring these under 5% slab, don't you think there'll be loss of revenues for the state? Loss of revenues for the state. State means again here, state government as well as central government. In fact, this has been one of the points which has been holding back the reforms under the GST structure. Every time we try to reduce the number of slabs or merge, right, 2 slabs like this, the concern has been loss of taxation revenues. But now, Government of India has come out with one argument which is very logical. Please listen to the argument of the government. The government simply says, the amount of taxes collected doesn't only depend on the tax rate. It also depends on tax base. I'll repeat the statement, then I'll give you a technical statement. I'll repeat, the amount of taxes that you're collecting is not just dependent on the tax rate, it is also dependent on the tax base. Technically, they'll say that the tax amount is function of tax rate as well as the tax base. Meaning what? Let's say hypothetically, there is a particular product which is being sold at 100 rupees plus 12% GST. 12% GST. Which means now the market price will be how much? 112. Amount of GST collected will be how much? 12 rupees. Now here the GST collected is a function of the GST rate. The government of India simply says, rather than 12%, let's say rather than keeping the GST at 12%, what if I change the GST rate? Rather than 12%, I will charge 5% now. Which means the product when sold at 100, now the market price will become 100 plus 5%, 105. The government will be collecting 5 rupees GST in the second case. But more importantly, the government says, because of the lowering of the price, don't you think it can add to the consumption demand in the market? It can add to more companies coming under the GST formalization. And overall, the goods which are sold now might increase. Instead of one good being sold, now you might end up selling 3 goods because the market prices have lowered. And when you sell 3 goods at 5% GST rate, you will end up collecting 15 rupee GST. So the argument of the government is the tax base will widen. With widening of the tax base, now you will not be losing tax revenues over a period of time, whatever revenues that you have lost initially, they can be compensated for. They will be recovered completely. This is the argument which has been put forward by Government of India against the critics, against the criticism that lowering tax rate or abolishing a higher tax rate, bringing the goods and services under lower tax rate will lead to loss of tax revenues. In addition to this, you must note one more thing as well. The Reserve Bank of India as well as Government of India in recent times have taken multiple reforms. For example, RBI has increased the money supply. The Government of India in the budget has introduced a taxation reform. As a result of this, we are expecting the demand for the goods and services to increase. But the government is not satisfied with the change of the demand in the market. One way to ensure that the demand will sure short change, the demand will increase, is by ensuring that the market prices will go down. Now you tell me, if the government will abolish 12% and bring all of these goods under 6% or let's say 5% slab, don't you think automatically market prices will drop? With the drop in the market prices, the quantity demanded for the product will start increasing. And that will contribute to the higher demand for goods and services in India, which in turn might basically contribute to the virtuous cycle in the economy. So these are certain very important things associated with this article, which is talking about center as well as the states arriving or moving towards consensus regarding what should be done with the cess, what should be done with the slab rate. Let me go forward to the next article, or before that, there is a question. Let's solve the question. Consider the following statements. Statement 1, the vice chairperson of the GST Council is elected among its members. The statement is absolutely correct. The chairperson is the finance minister, union finance minister. There is also a position of vice chairperson. The vice chairperson will be one of the members of the GST Council. Generally, they are appointed for a period, or their tenure is for the period of 2 years. All the union territories are individually represented in the council. This statement is incorrect. Individually, they are not represented. There are certain union territories with legislature, they are individually represented. Other union territories, the finance minister, right, that is the center, is the representative. Individually, there is no representation. Center and states have equal voting rights under the council. No, center has 1/3 of the voting rights, states have 2/3 of the voting rights, and this 2/3 will be equally divided between all of these right participants. Center only will have 1/3, remaining 2/3 will be divided equally. Right, so that is the voting right. Third statement is incorrect. How many of the statements are correct? Option A, only one is correct. Let me go forward. Next article. The government merges 36 schemes to float farm program. In the recently announced budget, the finance minister announced a new initiative, Prime Minister Dhanadhanya Krishi Yojana. I'll start using the short form, Prime Minister Dhanadhanya Krishi Yojana, PMDDKY. What is the logic of this initiative? As such, there are so many initiatives in the agriculture sector already. The government of India is worried that over a period of time, we have ended up announcing too many schemes in the agriculture. There is no coordination between these particular schemes. A lot of times there is an overlap in multiples of these particular schemes. So what has the government of India done now? It has taken 30 plus schemes, that is 36 central government schemes. It has basically merged all of these schemes into one scheme. That is PMDDKY. This scheme will be implemented in 100 agriculture districts. On what basis they will choose the 100 agriculture districts? There is an initiative of Government of India, Aspirational Districts Program. On the lines of this particular initiative, now Government of India will be identifying 100 districts on 3 very important parameters. One will be if these districts have very low productivity, these districts have a less intensity, right, or these districts have less access of credit penetration, etc. So 3 parameters are being used by the government to identify these 100 districts throughout India. And in these particular districts, annually there will be an outlay of 24,000 crore rupees for a duration of 6 years. So this is basically the Pradhana Mantri Dhanadhanya Krishi Yojana. It is expected to basically promote lot of investment in certain types of let's say infrastructure within agriculture. It is expected to promote irrigation infrastructure, warehousing infrastructure. So until now, rather than different ministries implementing these initiatives, now all of those have been integrated into only one initiative. That is the importance of this, and it is expected to provide benefit to 1.7 crore farmers directly. 1.7 crore. And Niti Aayog is said to be playing very important role here. Niti Aayog will be providing hand-holding services for efficient implementation of this initiative. Under this, what are the objectives? Please observe the objectives. It will enhance agriculture productivity. It is going to encourage crop diversification and sustainable agriculture practices. It will basically augment post-harvest storage capacity at panchayat and block level. And I hope you understand, all these kind of reforms are important. Reason being, I said, these districts will be identified based on certain parameters. For example, low productivity. I said this is one parameter, right? Cropping intensity is another parameter, and the credit accessibility. What is a credit penetration is another parameter. So if you look at it, you will realize why the objectives have been framed in such a way, because it will be able to address all of these problems. Improve irrigation infrastructure, enable greater access to short-term and long-term agriculture credit for the farmers. These are the very important objectives. And the government also has announced that for effective implementation of this initiative, to ensure that this initiative will be efficiently implemented, there will be committees formed at the district level as well, in order to ensure the reforms are going to be implemented and the benefits are reaching to the farmers. So these are certain very important points associated with the new initiative of Government of India. Let me go on to the next article. The revised Stand Up India scheme set for September rollout. Now, some of you might be thinking, sir, the article headline says this initiative will be implemented from September. Let's study in the month of September. Why are you discussing this now? The reason why I'm discussing this initiative right now is very recently this initiative has completed 9 years. No doubt the revamped structure or revamped, let's say the provisions would be announced later, implemented later by the government. One more reason why I'm taking up the article is this initiative has already completed 9 years, because this initiative was implemented back in April 2016. It was implemented by the government in April 2016. The initiative is named as Stand Up India Scheme. Stand Up India Scheme. What is the importance of this initiative? Under this initiative, the nodal authority for which is SIDBI, SIDBI, SIDBI. We will ensure that every bank branch will provide one loan for SC, ST entrepreneur, SC or ST entrepreneur, and for a woman entrepreneur. SC, ST entrepreneur and a woman entrepreneur. So it will ensure that these particular banking branches will issue at least one loan for these kind of entrepreneurs in the market. And what is the use of it? What is the logic behind this kind of an initiative? First and foremost, in case of MSME, that is micro, small, medium enterprises, please remember, one of the concern has been that sufficient access to institutional credit is not there in India. That's a fact, by the way. There is no sufficient access to institutional credit. In order to promote that only, the government of India has already implemented multiple initiatives. Now within that, we are trying to promote the growth of entrepreneurs belonging to SC, ST category and the women entrepreneurs. In that regards, this initiative Stand Up India will play a very important role. For example, let's imagine a question asked in the UPSC mains. What if UPSC mains will ask you a question like, discuss the reforms which have been implemented by the government of India in order to promote women empowerment? You'll have to mention this kind of an initiative. Please mention this kind of an initiative because it is targeting women entrepreneurs, right? It is also targeting SC or ST entrepreneurs. So what is the status? It has been implemented for 9 years now. The status is very simple. So far, under this, the amounts which have been sanctioned is more than 62,000 crore rupees. More than 62,000 crore rupees have been sanctioned. More than 36,000 crore rupees have been disbursed. If you want to have more data associated with this, please have a look at this data. Right? Basically, the data shows that accounts which are sanctioned are 2.69 lakh accounts. And out of this will be very important point for you. 2 lakh of the accounts, 2 lakh accounts are essentially women held accounts. And that's the reason I said, if you want to talk about women empowerment, please mention this particular point. Right? 61,000 crores plus sanctioned, more than 37,000 crore disbursed. Now, before you simply say, but sir, here the data is different and here the data is different. This data is latest one. This particular data is the latest one. And this particular data was published when the Stand Up India initiative completed 9 years in the month of April. So please do not be confused. Both the data sets are correct. One is older one which is there in the newspaper is the most recent one. Now, what are the important points under this initiative and what are we trying to change now? What are we trying to change? Why is the government of India trying to announce or revamp the Stand Up India initiative? Under this initiative, the entrepreneurs are given a loan value between 10 lakh rupees to 1 crore rupees. 10 lakh to 1 crore. Government of India wants to double this amount. They want to simply double this amount to 2 crore rupees so that higher value loans can be issued. It will further promote empowerment, financial inclusion, etc. But when I say loan is given here, remember this point as well. If your project cost is, let's say, hypothetically 1 crore rupees, the government under this initiative doesn't provide you complete 1 crore rupees. There is a concept of contribution, marginal contribution as well. Up to 15% of this project cost you will have to invest from your own pocket, and up to maximum 85% the government will ensure you will get it in the form of a loan. These loans are generally provided for a duration of 7 years. There is also a moratorium period of 18 months after which the repayment will start, and the rate of interest charged is also according to formula. Right? Look at the formula here. The rate of interest charged will be basically the base rate plus 3% plus tenor premium. And those who are wondering, sir, why base rate is mentioned here? My dear, please go back. Today, you have MCLR, marginal cost of funds based lending rate, that was implemented from April 2016. You have one more type of lending rate regime today, externally benchmark lending rate, that was introduced after 2019. So here is an initiative which predates both of them, and that is a precise reason the rate of interest charged will be base rate plus 3% plus tenor premium. Tenor premium essentially means different tenure of the loan, higher the tenure, higher will be the risk. So based on the tenure of the loan, more rate of interest will be added to that. That is the meaning of tenor premium. So these are certain very important points associated with Stand Up India. As I said, the government of India is considering revising the Stand Up India initiative and revamping the amount, increasing the amount given under this from 1 crore to 2 crore in the coming days. Once they announce it, please make a note of this. But until then, at least ensure that you know what is the impact of Stand Up India initiative for the last 9 years, especially you are someone who is writing the mains examination coming in the month of August. So these are certain very important points, right? Or let's say important articles I wanted to discuss. And as usual, I'm again telling you students, this is a recorded video. If you have questions associated with the points I'm discussing, any concerns, any doubts, drop in a comment. I will pick up that comment and address in the next video. So in the last video, there were certain doubts, mostly one doubt and the other one is a clarification. Sir, MS Swaminathan promote green revolution, not milk revolution. You're absolutely right. In the earlier video, the last video, when I was discussing the coins, there was one article regarding the commemorative coins. I said Mr. MS Swaminathan has been promoting Atmanirbharata in milk revolution. It's not correct, factually incorrect. It was Mr. Kurian. Mr. MS Swaminathan is promoting the Atmanirbharata in agriculture sector, that is green revolution. Please correct it. The doubt that was raised is, sir, with respect to SBI's QIP, my question is, does issuing QIP always mean that the money collected would go to CET1 bracket? Now, please understand, the CET1 bracket basically consists of equity. Simple. It has equity. Any issue of equity done by a bank, which is a normal equity, common equity by the way, it has to be counted as a part of CET1 bracket itself. And this is applicable only in the context of the banks. Because in case of companies, there is no concept of Basel guidelines. Right? So I hope you have understood this particular doubt. Now, as usual, as promised, at the end of the session, I'll give you two assignments. Assignment number 1, please look at the article here. Women's participation in India's labor force must not languish. There has been a lot of debate associated with the women's participation in India's labor market. Why it is lagging behind? What is the issue? Why should we promote participation of women, etc., etc.? So associated with this article, I've given a question here. There is a need to promote women's participation in economic activities to promote inclusive growth. Elaborate 15 marker question in 250 words. Please read this article, then you'll be able to write very good answer. In fact, there are multiple reports in recent times which have raised concern regarding lower women participation in India's labor market. And please be aware of that. Second article, a template for skilling. There is a lot of talk about even promotion of skilling in India. Why should we promote skilled labor availability? What is the benefit of it, etc.? So associated with this article, I've given a question here. Harnessing demographic dividend would require skilling where states and private sector participation is vital. Elaborate the statement, 15 mark in 250 words. So these are the two assignments for you people. Again, I reiterate this. Those who want to download this particular PPT that I'm using, you will be able to download it from the Telegram channel. So these are the very important articles from 17th July to 23rd July 2025. If you like this initiative, do hit the like button. If you're yet to join our YouTube channel, kindly do it right now. Thank you. Have a great day. See you again next week with another set of important economy related articles.